We're joined now by Vimal Kejriwal. He's Managing Director and CEO of KEC International. Mr. Kejriwal, very good morning to you, and thank you so much for speaking with us today here at NDTV Profit. Let's begin with this specific order announcement, since it's the latest, 1,097 crores in T&D, and 72% of order intake this year is already from the T&D space. What more detail can you give us about this order, its contribution to your revenues this quarter, and when you'll see inflows coming in from the order?
So, Tamanda, good morning. If you look at this order, it's been from two of our key markets. We have been talking about three key markets in T&D. One is India, one is Middle East, and one is the Americas. So the two parts you can come already coming into this order intake. And then we have an L1 of more than 4,000 crores, which is largely, I'll say, a large part of it is from India. So in Q4, you will see a lot more orders flowing in from India. If you come back to this order of around 1,100 crores, one large piece of that is a large order in the UAE for setting up of 400 kV lines, and the rest is spread between Brazil, US, and Mexico, but largely in Brazil. There was a very large auction which had happened last year in Brazil, and we had some pre-bid tie-ups, so those are now getting fructified into orders. So a large part of that order is from Brazil. I think that's the broad breakup.
And when do these sort of hit your balance sheet, Mr. Kejriwal?
So the UAE order and also the Mexican order should start flowing into this quarter itself, maybe around March or so. Brazil will start manufacturing, is just starting, so revenues will start coming in probably, I think, end of Q1 next year or maybe Q2 or next financial year. It will start coming in from that time. It's a large order.
Okay, so UAE and Mexico this quarter itself. Can you give us the sense of the size out of, because we have that whole amount of about 1,100 odd crores, but how much of it from UAE?
I think UAE, I don't have the exact figure, but it could be around 400 odd crores. 400, or I think it's around 500, sorry.
So, Kejriwal, hi, it's also Samina joining in. A quick word on how are these margins looking? Your international orders, do they contribute to a better margin profile as compared to domestic ones? And if you can give me the absolute number, that would be great.
So difficult to give you a straight answer, Samina. The margins would depend upon order to order. Like, I'm very clear that the American orders will not be as much margins as would be the Middle East or as would be the India order. I think that the difference is that, the forex borrowing costs, etc., are lower. So at the end of it, the project level margins may be similar. But at the end of it, now with the US rates going down, we'll definitely see at the net profit level, the margins in the international orders will start picking up as compared to India, because the rates have not gone down in India.
Also, let's talk about your order book. 72% of your orders come in from the T&D business. How does this skew the overall revenue mix? Are you concerned on over-dependence on the T&D vertical?
So today, I think we are pretty happy about it.
Okay.
Some time back, maybe 2 years back, we would have been concerned about it when the margin levels were lower. Now that the margin levels in T&D has moved up, I think we are pretty happy with what is happening. I think one thing we should keep in mind is that although the order intake is 72% this year, our order book is roughly around 60% for T&D. We have railways and we have 20% of civil, which has not been moving that fast as we wanted it to move. So I think the transmission revenue next year in FY26 should be closer to 60%, from 55 to 60%, although I think it was closer to 50% last year. It's moving up, but it's not 70, it will not be 70%.
Mr. Kejriwal, just give us a sense of where you're going with the cables business. You, of course, transfer it to KEC Asian Cables with that slump sale. What is going to be the kind of focus over there, and is that now going to be completely hived off?
So no, I don't think we are planning to hive it off completely. It's 100% subsidiary of KEC. What we are planning to do is that we have planned a lot of capital expenditure there. So this year we should be around 1,800 or sort of revenue in cables for the whole year. And next year we should be around 24, 25, and the year after 3,000 crores based on the capex which we are incurring. I think that's the way we are looking at it. And the capex which we are incurring is for aluminum conductor and also for flexible and rubber cables, etc., which are relatively better in terms of margin. So the game plan is that we take the revenues up to 3,000. And today our EBITDA margins in cable is at least 200 to 300 basis points lower than the market leaders in cable. So we want to use this leverage to push up the EBITDA margins. That's the whole game plan.
Just in terms of, you started the interview, Mr. Kejriwal, talking about how a sizable chunk of orders are going to come in from India, where you've got L1 position. What is the kind of outlook that you're looking at going into Q4 and I would say also Q1 of next year as CAPEX is increasing? What are the areas where you're seeing a bigger upside?
So if you look at our numbers, if we talk about numbers, we are at 19,500. Our stated number was around 25,000 crores for the year. I think we should be able to achieve that. We are already at L1 of more than 4,000 crores. So as far as KEC is concerned, we should reach around 25,000. T&D may be actually more than 72 by the end of the year in terms of order intake. If you look at the civil and other businesses, I think CAPEX has been a disappointment. We have not seen too much CAPEX happening either by the government or by the private sector. In private, I think there's only one segment where we are seeing CAPEX happening, which is basically metals and mining, and more particularly, I think steel. I think that's the place where most of the orders in the CAPEX have been coming in. If you look at last year or a year before, it was a lot of orders which came in from the government, water, etc., which have been very slow. So I don't see too much happening right now. The way it is, it's all going to be power T&D, which is where the orders are consistently and continuously coming up, and mostly from the metals industry. And probably the third piece, which I'll not call it directly CAPEX, is the residential piece. I think there we have been seeing a lot of inquiries coming up, and I think that could be the third piece.
Kejriwal, are there any pricing pressures or risk associated with these orders that we've talked about that could potentially impact profitability? And also, have you witnessed or do you anticipate any sort of backlog with execution delays at this stage?
There is some backlog because very clearly, if you look at us, we have been growing at 10%. Our stated number is 15% for the year. Okay. So clearly, with the manpower issue which is there has been some pressure on this, which is resulting in, in a way, in a good thing is that we are getting into a lot more mechanization and automation, etc. But there is some pressure on the execution, especially on the civil projects in India, where the labor requirement is pretty high.
Right. Also, you've got a pretty healthy mix in terms of orders that you're bagging internationally, and all is well as long as the dollar continues to strengthen from here. But have you undertaken any sort of hedging for the currency? And then the reason I ask you this is to get a sense of what it could do, because the currency is volatile. And if you have significant growth coming from outside, you want to be concerned about this, right? Because this will impact your revenue numbers quarter on quarter.
So, Samina, if you look at our balance sheet, and we have a board mandate of being hedged at least 75%. Typically, we are hedged about 90%. Number one. Number two, what happens in most of our international orders, we also have a lot of, I'll say, liability side exposure also. So the asset side exposure, which is what comes to India, would be only in terms of transmission towers, which we supply from India. So we do not have a very large net exposure, okay, in foreign currency. So I think we are pretty happy with what it is. And on your first question about the profit margins, etc., issues and all, I think we are more or less hedged on the base metals. The exposures which we normally have open is on cement and steel, because steel you cannot hedge, and cement always normally you end up buying in the cash market. And I think right now both of them are pretty, I'll say, benign for us. So I don't see any major issue or risk to the margins which we're talking about.
Kejriwal, just one last question. With the current order inflow guidance of 25,000, you're close to 20,000. We still have 3 months to go before we close out this financial year. Is there a good upside risk you will outdo your guidance?
Difficult to say, because what happens is in this industry, I think the ordering cycle is pretty long. So if you're not L1 today, getting them converted into orders within the next quarter may be slightly difficult. So I don't see a significant upside to the order guidance for this year, no.
Okay. Thank you so much, Mr. Kejriwal, for speaking with us.